dollar index. A closer look on the structure, you see that from June 28th, we have created a structure here. We have here as a demand structure, we have here as a supply roof, we have here as a demand floor, we have here as a supply roof, demand floor, and price returns here. So except they break out, if they break out from here, then that will really give gold a softer landing. But from what I see, they are defending here. So if they defend it and go up, where I see a potential rejection is at this level on daily time frame. Use a strong daily close. So at this level, I think they might pull back again. If they fail to break here, then they'll take here out, and you'll see that will return back to the this is a January low, very much possible. So whatever pulls price away from there could technically bring us to January low. This is very much possible for the index. And if we take this path, then it gives gold, silver, copper, Euro USD, AED USD, GBP USD, all those pairs that is traded in USD, a buying advantage over the dollar. So this is what we see technically. So I think another thing to to watch is on daily. Let's see if but what I see, they are defending here as a demand floor on daily time frame. Buyers are defending this area. So they are defending it to go back and retest 100.1511. So at that level, it's up to buyers if they want to keep that momentum or they want to break out from there. Remember, the dollar index is a key trading barometer, and lately it's not been moving the way I want it to move, and it can be a little bit not giving us a clear direction. But from what I see today, if you check Euro USD is selling, GBP USD is selling, AED USD is selling, USD ZAR is buying, USD JPY is buying, and your NZD USD is selling due to this price action on daily time frame. You can see yesterday was sell, and all through yesterday they all had their leverage, but today it seems it's turning it around due to the structure on daily time frame. On daily time frame, to put it into strong clarity, you see we have here as as a resistance structure. Let me take this out. Here's a resistance structure. Here's a resistance structure, support structure. Here's a resistance structure. Here's a resistance structure. Took liquidity, broke out the structure, turned it to demand. And we return here, broke the structure, turned it to supply roof 1, supply roof 2, 3, 4, 5, 6, broke the structure, returned demand floor 1, demand floor 2, demand floor 3, and today looks like yesterday's sold candle into demand. And we are seeing that it could uh, it could rally up, very much possible. It could rally here into 100, and at this level, then we'll decide if the index already it has tested that level before. After breakout, price came there, broke out the structure. But the reason it's now rejecting is because there's a pending order on the ascending trend line for the money. And so what I see technically is that price might go back again. But if we continue to see a softer dollar and the dollar pulls out from that structure, from where it is now, then it's going to be a clean bullish continuation for gold, silver, and the copper. So at the moment, I want to see a breakout from here. If we have a breakout, but let price go back rally to go and retest resistance structure 1, resistance structure 2, break out of structure, a clear break and retest in first. And price came here, tested it one, tested it two, break out of structure, retested it on July 31st. Now we're having an official buy candle after price dipping into demand. So if price goes back here, we could potentially be shorting from here, dollar index. Yeah, the potential is very high, and we're already having an M structure build up. Let's see what it is on weekly. If it's truly an M structure, this is an M structure. Is an M structure, and on daily time frame, the now, oh sorry, on weekly time frame, this could extend into the my spade strategy. That means the buying might extend into up to 106,749. If we have buying extending to 106, I mean into 10749, then that will be break of a daily structure, and on retest price will continue on a bullish path. So this is very much possible, you know. So if this is weekly resistance, this one is weekly, this one is daily. Let me put it up. So this is daily, this the first one is weekly, weekly supply roof, and the second one is daily. So if price moves into this, if a daily candle moves into this weekly resistance, honestly, it could be this case. You know, this market is very, very unpredictable. It's very, very unpredictable. So if price moves into that structure on daily, if we have this candle, let's say break here, then it's going to retest it and come, because that will be break of a daily resistance structure. Here is daily. So if the weekly candle moves in and break the daily, it could come back and just pick liquidity and continue. I think dollar bulls are, you know, longing to reclaim dollar above 100. Dollar above 100 means a lot to every other currency pair. So if this price moves from here and breaks the daily resistance structure and come into weekly, it could get rejected using a broken daily supply roof as a demand floor, and you see, if you see price project from there. This is just a one case scenario. Let me see, let me put it like this. It's a one case scenario. If this buying candle goes back and break this supply roof and returns into weekly supply, it will use daily demand and move. This is very much possible. It's very much possible. This is the financial market. Anything is technically possible. And if that happens, we have um, a pending buy structure somewhere around here that has held price firmly. You can look at it from the line chart. You see it clearly. The market is structured. Everything you see in the market is programmed. There's no random trading. The only people who are doing random trading is us, retail traders. We are the only ones trading randomly. But if you look at the structure of the market, they follow a course, an arranged course. Look at here. Is there is a demand floor, demand floor, demand floor, demand floor final, and you see it's already been programmed that money will continue to move like this, and you see it when you go back. So from there, price came back, formed a double top at that level. Price didn't breach that daily close, and we have seen the dollar index dropping from that roof. So the next thing we are going to see is, if we pull in, we are going to confront that structure again as a resistance structure. Haven't seen what it did in the past, so it's going to serve as a resistance structure. So let's see if it comes here, then it could constitute rejection. So this is how the market is already scripted. It's written. So every time you see chart, always bear in mind there are people who own it. There are people who control it. It's not your own. That's what it means. So you can see what happened here. Emotion of buyers and sellers. By you see them the way it played here, but it's already scripted on a single ascending trend line. It tells us a story that there are people who own this market. Some people own it, and we do not know them. But from what we see, there's an ascending trend line, ATL. So this is just for educational purpose and to continue to x-ray what is going on in the financial market. The market is calibrated. Everything you see is already scripted, and the buying and selling is already scripted. So that's what it means. No random buy, no random sell. So it's for us to figure out where to buy and where to sell. So just like what we're saying now, that if buyers fail to defend the current level where price is here, a breakout from here will ultimately pull price back into 96, 95 level. And the only area where I see maybe a closer salvage would be here, where we have another close and clean structure. That also another scripted structure. You see it on from the chart on the weekly time frame. You see that price has also done the same thing. Use here as a demand floor, and here as a supply roof, and here as another supply roof. Breakout of structure, a clean break and structure, break and retest enforced, retest one, and we have here as a retest two. So technically, if price returns there, I want to see that that area is also respected as a technical demand floor, this area. So this is very much possible. So if price could reverse from here, if price dips itself into that structure, it is very much possible. So my understanding in the market is to let you know that the market is already priced. They already know what to do. So by for now, these are insight on the dollar. So dollar is firming up on daily, and the EU, AU, GU, user, NZD, USD could be on in the favor of a dollar. So wherever you see the dollar sign, tilt to the dollar sign for today. And wherever if price match into here, dollar will lose that advantage because they are going to face rejection. They are facing this rejection on three fronts: resistance structure one, resistance structure two, breakout of structure, retest one, retest two. If price comes back here, it could from here start its bearish journey that will now come down here and break the structure and go down. Bye for now.